If you want to pay the least amount of taxes legally, you're likely looking for ways to keep more of your hard-earned money in your pocket. It's a goal everyone can relate to, but it's not always easy to navigate the world of taxes and know what's truly legal versus what's just creative accounting. So let's break it down with some actionable steps that could help you reduce your tax burden without stepping into murky territory. First off, understanding your tax brackets is key. The more you earn, the higher your tax rate will be. But did you know you can reduce taxable income by taking advantage of tax-deferred accounts like IRAs and 401ks? It's one of the most common and effective strategies, and if you're looking for a smart way to protect your wealth for the long term, you should definitely look into gold IRAs. They can shield your retirement savings from inflation and stock market volatility, plus provide tax benefits. If you're serious about protecting your wealth in the next 2 weeks, click the first link in the description to get the free Gold IRA guide. Thousands of Americans are already doing this to secure their savings. Another important thing is tax deductions. As a retiree, there are a number of deductions you might be missing. For example, if you're over 65, you may qualify for a higher standard deduction, which lowers your taxable income. You can also deduct medical expenses, charitable donations, and even some of your state taxes if they exceed certain thresholds. But even with these deductions, one thing you might overlook is how certain investments can reduce your taxable income. Now here's where things get interesting. While traditional retirement accounts are great for tax deferral, you might also want to look into tax-free options like Roth IRAs. The key difference is that with Roth IRAs, you pay taxes up front, but your withdrawals are tax-free later on. This is especially powerful if you expect your income to grow significantly in the future, as you're essentially locking in today's tax rates. If you're wondering whether Roth IRAs or Gold IRAs are the best fit for you, let me tell you that Gold IRAs are rapidly becoming the go-to choice for high net worth individuals due to their long-term stability. For those with larger portfolios, it's worth considering how much you're paying in capital gains tax. The government taxes long-term capital gains at a lower rate, so holding onto investments for over a year before selling could save you a lot of money. Another way to reduce taxable gains is through tax loss harvesting, which means selling investments at a loss to offset the taxes on your gains. There's also the matter of estate planning. If you want to reduce estate taxes, you'll need to make sure your assets are structured properly. This could involve setting up trusts, gifting assets, or using life insurance policies to transfer wealth more efficiently to your heirs. But be careful, because improper planning can leave your family with unexpected tax burdens. So if you're looking for legal tax-saving strategies, there's no one-size-fits-all solution. But what you can do is start thinking about your retirement, your wealth, and how to shield it from the tax man. And if you're in a position where you have more than 100K in your IRA or 401k, or even $5 million in savings, the best way to ensure you're protecting that wealth for the future is to consider alternatives like Gold IRAs. If you're looking for a safe way to diversify your portfolio and minimize your tax exposure, a Gold IRA may be the most strategic move you can make. It's especially ideal for American retirees who want to keep their wealth intact through inflation and market downturns. So, for more information, don't hesitate to click the first link in the description. It's free, and it could be the first step towards protecting your wealth and paying the least amount of taxes legally. We've covered quite a few strategies today, but if you're serious about protecting your wealth long term, a Gold IRA is an option you'll want to look into further. And with that, you'll be in a much better position to pay the least amount of taxes legally while safeguarding your savings.